Hi, this is John Graham from Neighborly Financial in Roseville, California. What I'd like to do today is take a few minutes and go over the basics of getting pre-qualified for a home loan. There are three parts that we want to go over today. The first part relates to your income. The income is basically your wages, salary, or hourly income, and in addition to that, we look at any overtime, any bonuses, or any commissions that you get. And we verify this by looking at your W-2s and some bank statements. And also, if you're self-employed, what we do is we actually have to look at your tax returns in order to verify your income. The second part of the pre-qualification process involves looking at homeowners' expenses and any debts that you have. So with regard to the homeowner's expenses, there's the mortgage itself, which is the principal and the interest, but also any taxes that are associated with the house, as well as any homeowner's insurance and any homeowners association dues that are associated with the property. The debts, we also look at not just the home mortgage debt, but also the debts with credit cards and any car payments or student loans or alimony or any child support payments, any monthly obligation that you have. Part of the equation that we look at when we try to pre-qualify people for a loan is the FICO score. It's the credit score. The FICO score is a score that runs anywhere from 300 to 850, and obviously the 850 is a very good score, and the 300 is a score that's not very good, and it won't get you into a house. But there are three major components that go into the FICO score. There is the first part, and it's the most important, and that is any default on a loan or any bankruptcy that you've had in the last few years. That has a major impact on the credit score. The second part that has a major impact on the score is your late payments on any credit obligations that you have. If you're making your credit card payments late, or if you've missed a student loan payment or any mortgage payments in the past, these obviously have a big impact on your credit score as well. The third part has to do with the amount of credit card debt that you carry as a relative relationship to the total credit card limit that you have. Obviously, if you have a large credit card limit, it does have an impact on your FICO score. So it's important to keep those credit card payments down in order to boost your credit score. We've talked about income and debt and FICO scores. The last thing that I want to talk about here is the debt to income ratios. The lenders look at debt to income ratios as a way to calculate the amount of risk that they incur with a particular borrower. So they take two measures of debt to income. What they do, the first measure is to look at the housing obligation. This would be the mortgage payment, as well as any taxes that are due, as well as any the homeowner's insurance, and then they calculate that as a percentage of your total income. The second number that they look at for debt to income is called the back-end number, and they look at your total obligations for monthly payments. This would be your housing costs as well as any credit card payments, student loans, and such. And they compare that as a total percentage of your total income. And then they look at that and calculate the amount of risk. Now that I've given you an overview of the pre-qualification process, what it's important to do is think about the things that I've said, and before you come to any lender or mortgage broker and try to get pre-qualified, think about the things that I've said. Try to do some homework. Try to collect your income, your debts. Try to understand where you are with your FICO score. Bring that information in, and you can be prepared to talk to a lender about where you stand, and they can also do some preliminary calculations regarding the amount of money that you can borrow, and also that would give you an indication then as to the amount of a home or the size of a home that you could potentially afford. Again, this is John Graham from Neighborly Financial in Roseville, California, bringing you the overview on how to get pre-qualified for a home loan. You can find us on the web at www.neighborlyfinancial.com, or you can give us a call at the phone number listed on the website. Thanks.